All right, welcome back to the Best of U.S. Investors, two regular guys show. I got Mark over here and Trent, myself, here, and today we're going to talk about yesterday's sell-off and the recovery that we're seeing today. Yesterday was Monday. This is being recorded on Tuesday. Market is recovering, a bounce back, and it's this subject of recency bias. So let's get to it.
Hello.
All right, Mark, what you think?
Well, yesterday I was in front of a dumpster fire, and today I'm in a nice, peaceful beach home. Everything is back to normal. Everything is happy. Unicorns and puppies. We're good. So I guess we don't have anything to talk about. Go out and buy the dip, put it all in, go all in, and have a nice life.
Right.
No. So I mean, again, I talk about charts and I talk about you know technicals and what the technicals are showing me are not quite, let's all go jump in again. I mean, really, yesterday we had a big dump in the market, dumpster fire. Friday we had a dump in the market. Last week wasn't good except for Wednesday when the Fed came out and said we're going to lower rates in September and everyone was partying. I don't see that one day up makes a big deal right now because, one day is not a trend. And we'll look at some charts. But I'm just listening to the halftime report on CNBC, and all the technical committee they're all buying yesterday, and this was just a blip, and that thing in Japan just happened, and it doesn't make a difference here, and I wondered to myself, well, what really changed last night? Because I'm not hearing anybody calling today for one and a half point cut in the interest rates. That yesterday, that's all they talked about: 75 basis points, 1.5 point cut. We need to do it because everything's falling apart. And today, it's like crickets on that.
Nothing happened.
I know. So here we are, and here's the cheerleaders and the talking heads. But we'll look at some charts and see what's going on. But for me, nothing really happened. I heard them say, the economy's fine, it's growing, and blah blah blah. Well, we know the economy is growing because the United States government is pumping so much money into the economy. That's almost the entire GNP that we're doing. We also know that the Federal Reserve said everything was fine last Wednesday. Jobs are resilient, not a big deal. And then on Friday, the jobs report came out. They revised down the 2 months prior to that, and we had 114,000 jobs. Think about next week or next month when they come out. Are they going to revise the 114,000 down to a negative number? That's been their history.
Yeah.
Okay. So what has really changed? And again, are people experiencing price cuts all across the board and by 20% at the grocery store? And we're back to 2019. How about at the gas station? Okay. Today, U.S. household debt came out. Total consumer debt in the U.S. rose by 109 billion, or 0.6% from the prior quarter, to a fresh high of 17.8 trillion. And this is from the Federal Reserve of New York. Overall borrowing levels are now at 3.7 trillion above where they were at the end of 2019. Mortgage balances were up by 77 billion to 12.52 billion. Okay, and some of that can be attributed to higher costs, higher interest rates, higher taxes, higher insurance that all cause, in your mortgages. Auto loans increased by 10 billion to 1.6 trillion, and overall credit card borrowing, outstanding credit card, rose by 27 billion to 1.14 trillion. Okay. Jeez. Credit card balances during the quarter were 5.8% above the level they stood at a year ago. Okay. Other balances, which include retail cards and other consumer loans, were flat, while student loan balances declined by 10 billion to 1.59 billion. But of course, we know the government has been, forgiving student debt. So of course that would go down. And then we had the economic optimism index, and it increased by 0.7% to 44.5 in August. That's the highest in 7 months, but missed the expectations of 45. And the index has remained in negative territory for 36 consecutive months. So I'm not seeing any difference between yesterday and today, other than markets just will go down, and we've gone down a lot. They're going to have to relieve a little bit and come back up, and the charts will show us that Trent. So, that's my take on it. What's yours?
My take is that it's bigger than just the stock price of the company you're buying. It's bigger um than an AI revolution or you know uh, it's bigger than what we see, the lens that we look through. Um, and I think what's happening is, and Kyle Bass in an interview yesterday about the whole what is happening, really painted a very good picture, and that was that the Fed expanded their balance sheet, meaning they went out and bought treasuries from 4 trillion to 7 trillion, basically 40% increase in that amount, right? Now, and that juiced the market. That put money in our pockets. That juiced the market. Combine that with, at one time prior to what, 5 days, 6 days ago, you could borrow the Japanese yen basically for zero. Take that money you borrowed, invest it in treasuries or invested in AI stocks. All of a sudden that changed because their Federal Reserve raised rates 15 basis points, first time since 2007. That took the market by surprise, forcing those people to sell the NVIDIAs, the Microsofts, and all these 35% of the what moves the S&P 500, which is three stocks, forcing them to sell it and give it back to those people in Japan. What we're seeing, and I thought was a very good visual, is we're running out of fuel in a sense. We don't have the fuel anymore. The liquidity in the market is shrinking, and all of a sudden, the stock market is falling apart. Yet, economy-wise, we've been seeing this strain on the individual in the United States for a while now. I'll give you an example. I am dealing with a housing situation for my youngest daughter in Savannah. She goes to school in Savannah, Georgia. Well, I'm talking with one of the housing counselors because, of course, why don't you lean on him, Dad? Because you're more aggressive. Maybe you can get this figured out. She explains to me that housing 3 years ago, 35% of the students had on-campus housing. That has skyrocketed to 55%. And the reason is because the cost to live off campus anymore has gone through the roof. So all of a sudden, they've got a wait list for housing because people can't afford off-campus housing. That, in my opinion, is reality, and that demonstrates how much liquidity in the system is drying up. And really what we're seeing in a sense is a normalizing of the entire global economy and market. And there's danger if the Fed lowers rates. There's really no good side to it. There's every direction they go, if they lower rates, it's not a good scene. And that to me is what I'm seeing. Today, what I'm seeing is it's the machines buying on the low at the end of the day and capitalizing on it this morning. And chances are I would not be surprised if we see the market close lower today, Tuesday, the 6th of August, by the end of the day.
Right.
I don't think this is over.
European markets are mixed. We saw other Asian markets close down today. So yeah, you're probably right. And what I'm seeing is technically, we went down to pass some support and came back up. And so now we're just realigning back in with the technicals, but the momentum is still down and trending down. But, even on a downtrend, you have up days. It doesn't mean you're back in the market, or that technically it says buy. It doesn't to me. And we'll look at charts and, people can make up their own minds if they want to buy. It's really up to you. But why not use these tools and help you out a little bit to get a better price, or maybe catch you from not catching a falling knife, or trying to.
Well, and I think it's very important. That's part of your investment plan, is that you have rules. And I'm looking at the SPX, the S&P 500 right now. And all I see since since July 16th is a downward trending market. That's all I see. I see a gap down from from Friday to yesterday, and now we're trying to fill that gap. But I still see a downward trending market. And if I'm an intermediate to long-term investor, I look at this and I go, I'm not. This is going to be another knife that falls. We're headed. We'll head further south until the trend is broken. And I guess the question mark is, what would break this trend, this downside trend in the indexes? What would cause that to change? And
Well,
that's the big question. And I think it's a
I
big
mean,
question that can't be answered
yeah,
right away.
I look at my trading guidelines, and when it starts meeting the requirements of my major issues in my trading guidelines, and then it'll say go.
Yeah,
But now it's not, and we can look at some of these.
yeah,
But even like the mega caps, who may be up today. Still, we had Microsoft and Tesla close yesterday below the 200. Okay,
yeah.
I mean that's not good,
No,
And I don't know where they are today. We'll look at the charts, but it wasn't good yesterday.
right. Which means it's not good today. I mean,
Right.
if it's going to close above the 200, maybe there's a little bit of hope, but you
Yeah.
always have a retest, of support at some point in time to make sure it's solid. I just don't see it being solid right now.
Let's
Yeah.
look at a few.
Okay.
We'll look at a few. Okay. We'll start with the Dow. So here's the Dow, and you saw we were kind of going sideways for a while, and then we got up to the point of um, beginning of August right here, and then we just saw the dump. And the
Hmm.
dump took us down below the 9, below the 20, below the 50, all the way down yesterday to below the Bollinger Band. So a lot of times you only trade less than 5% outside of either the lower or the upper Bollinger Band. So today you're seeing we're pulling back in, but we're still within the downward trend. We're still within, the bounds of the trend in a downward pattern. And here's the 200. Okay. We're still looking at MACDs and stochastics that are not in the green yet, along with the RSI. So yeah, we'll see a little pullback. Let's look at the S&P then. See if it even looks. This is a SPY. Same thing. Came down, traded underneath the Bollinger, came back up to the Bollinger, still trading within the channel, below the middle of the channel, below the 9, below the 50. Okay, just barely above the 20. And here's the 200. Same thing on the oscillators. Okay, so yeah, a little bounce back. Would this be enough for me on a swing trade on a daily chart to get back in? Not yet. Okay. How about the Qs? Same thing, except we went down to the Qs. We actually yesterday tested the 200, but closed above it. And so today we're above the Bollinger Band, but we're right to the middle of the channel. And that's where we're seeing some resistance at the middle of the channel. We have some
Hmm.
sell orders, here just above the 9. So we got some ways to go still on the Qs. So, is it going to hold? Tomorrow's going to go down. Here's your Bollinger Band. Okay. Plus or minus 2 standard deviations from the middle, which is the 20. So, we're still below the 20. We'll see. So when you look at the major averages, we'll look at the IWM. This is the Russell.
Okay.
Look at the Russell. Russell came down. Here's your 200. Very good resistance or support level until you get below it, and it switches. We came back up inside the Bollinger Band. Okay, we're still
Yeah.
below the 50, the 9, the 20. So again, is this a place to buy? Not according to my trading plans, but other people may do other strategies. Some people trade off the Bollinger Bands. Okay, so someone who trades off the Bollinger Bands may say, "Okay, I'll get in." That's not
Right.
the way that I trade. Okay, so it's based on how you trade, what you're used to. But at least when you're trading off the Bollinger Bands or you're trading off MACDs or whatever, at least you have a system, okay,
Yeah.
that meets your requirements. And that's all we try to do is teach people to at least have a trading plan so it takes the emotion out so that you don't think, oh my gosh, fear of missing out, I better get back in, when you still, have a lot of resistance levels above you on the IWM and all these indices.
Yeah. I think it's this is so critical to have that trading plan. This is times where if you had a solid trading plan in place, chances are you didn't lose much money, if any, yesterday. And even
Remember
as a
yesterday?
long-term investor.
Yeah, I remember yesterday we talked about Microsoft, and here it is. This was yesterday. I said,
Mhm.
oh my gosh, if it closes below that 200, this is going to turn from support, which was here, into resistance. And look what happened. Today we've come back above the Bollinger, and where are we getting resistance? Right at that 200. Okay. I also said yesterday, if this doesn't get across, it could be a bounce and continue down along this Bollinger Band. And we'll have to wait till tomorrow. We'll wait till today to see if it can cross above the 200 and then the next day get continually above that 200. But I got, downward trending short-term 9s to 20s to 50s, all trending down on Microsoft. And I still have oscillators that are negative. So, this is a big deal. And if you're a trader and you're technically, I mean, just a regular person with 4 lines, and 3 oscillators and a Bollinger Band, this gives you so much more information about should I get in or should I get out, other than just throwing a dart or watching, Josh Brown or Jim Lebenthal on CNBC say, I'm buying. They were saying that today, and I'm like, are you kidding me? One guy was talking about buying NVIDIA. Let me go look at NVIDIA. Okay, same thing on NVIDIA. NVIDIA was below or closed right on the Bollinger. Today it went up. Okay, you expect it to be up a little. We're still below the short-term moving averages, the 9, the 20, the 50. Have some sells right here. We're above the 200, which is good. But in my trading plan, I wouldn't be in yet. Okay, and we're seeing the downward Bollinger Band coming up, trending back down. We don't have the crossovers yet on the oscillators. So although it's a good bounce up today, is it the day to buy? Not for me on my trading plan, but for others it might be.
Yeah.
What else you want to look at? What else you want to look at, Trent?
Apple being the largest of the S&P 500, because I know a lot of people who watch this own the S&P 500 in their 401ks.
Let me tighten this up a little bit. So we're seeing the same on Apple. So Apple came down yesterday below. Look, it gapped down below the 50. Okay, and that's a pretty good level of support. It blew right through.
Right.
Came back and closed right under the Bollinger Band. Today it looks like a gap down, and now it's trying to come back up again, hitting the Bollinger Band. Okay, we still got the 50. We are above the 200. Good. The 9, the 20 are still continuing to slide down. Okay. Let me put in some support and resistance in there. Okay. Okay. What else we want to look at?
Well, hold on. If looking at the 2 candlesticks yesterday and today, if we see a close on today's candlestick below where it closed yesterday, I interpret that as continued weakness in that position. It didn't have enough to push it higher and close the day out. So that to me is cautionary. And if it closes below that Bollinger Band, to me that is still a red flag.
Yeah, and what I normally see is you'll see sideways trading until that price gets into the Bollinger Band, because very rarely do I see more than 4 or 5 candles outside the Bollinger Band before it pulls back in. But it's still below. It's still on the lower Bollinger Band, and we still have bad oscillators down here. So here's where we are in Apple. Would I buy Apple today? Not technically speaking. This chart tells me not to yet, according to my trading plan.
Yeah. Let's take a look at the U.S. 10-year Treasury yield. Because I follow this because
what's the ETF on that one? We looked at it yesterday.
Oh, TLT or IEF is the
IEF?
Yeah, look at the IEF. That's the ETF.
There it is.
Yeah. So if I'm looking at the 10-year on the yield, it got as low yesterday as I'll tell you.
Was it like 368 or something like that?
It got as low as 3.66, closed the day out at 3.79, and today is presently trading at 3.82.
Mm-hmm.
What I see there is you've had a move in the last, what, 5 trading days where you opened on the 31st of July at 4.14%. You got as low intraday yesterday as 3.66%. And today you're up against resistance at 3.88%. What this tells me is if we can't break through resistance at 3.88, there's a good chance we're going to see a move down in the yield and a rise again in the ETF. Or it may be more like it gets back to 4% on the yield and IEF gets back down to, say, the 9-day simple moving average or the 20-day simple moving average. And then you have a rotation back out of risk into risk off, which would propel these investment grade bond funds. And understand, I think most people understand who watch this, but if you don't, bonds are like teeter-totters. If this is the yield and this is the value of the bond, if the yield goes up, the value goes down, and vice versa. What we're seeing is the yield's going, this being the yield's going down. I'm sorry, I'm looking in reverse, and the value is going up in value. Because everybody's buying into it and they're buying the treasury because it's a risk-off environment. They also trade this, they trade the yield, so they'll drive the yield back up. They've taken their profits and they'll drive the yield back up to resistance, and then chances are they'll reignite this trade again, driving yields and bond values higher. And so I look at this and I go, this is very telling to me because this is where the world goes to for safety. They flood when things go bad, they go to U.S. Treasuries. When things get really good, they exit U.S. Treasuries. And we have seen that over the last, I would say, 2 years in the exodus. And then all of a sudden we have had this pop in the last, 7 days or so.
Yeah, here's the year.
Yeah. So this is where global money goes to when it's scared. They go to the U.S. Treasury market. And when things are great and like we saw through 2023, people exited bonds in exchange for U.S. dollars, and they took those U.S. dollars and they put them to work in high volatile positions like Apple, Google, Microsoft, NVDA. That whole situation. So I think what I'm seeing here is a process of money is tightening. There's not as much liquidity in the system, and it's moving out towards the bond market. But it's going to not do it in a straight line. It's going to do it in a roller coaster way. So that's what I'm seeing. So if you're looking at indicators that tell you where the direction of money is flowing globally, look at the 10-year U.S. Treasury. Look at the 30-year U.S. Treasury. Look at all the Treasury markets.
There's the 30.
Yeah, similar situation. Chances are we'll see TLT come down towards that 9 or 20-day simple moving average and find support there. And the yields will go back up, and then you'll have this rotation again. Because I think outside elements variables are affecting this market, and it never goes in a straight line up and it never goes in a straight line down. It does this. And so I think we have to take that into account. So yeah, today the market's rallying, but that money is partially moving out of risk off to risk on to capture a trade. And chances are we're going to see that reverse again as well. That's my viewpoint on this.
I can't disagree. Here's Tesla again. Yesterday closed on the Bollinger. Today, here's the 200. Is it going to bounce and come back down, or is it going to get past? It looks like it's having trouble getting across it to me.
Yeah.
And again, this machine trading that we're up against, they use these same lines along with a bunch of other data in their algorithms that I don't use. But you can see, they use the same type of technical analysis. I'm very simple in mine, but once you realize that and you start understanding, what moving averages are a part of those logarithms, it certainly helps you as a retail investor get an edge over your neighbor who doesn't do this and just says, oh, the market went down 5% or XYZ went down 5%. I'm going to buy because it's on sale. Well, it might not be on sale.
Yeah.
And what I'm saying here with Tesla, if it doesn't get past the 200, it's certainly not on sale yet. You're probably going to get a better price, in Tesla if it can't do that.
Yeah. Here's the other thing, and we don't think about foreign, other countries in the sense of their people are like us U.S. citizens. We're all saving up for a future dream of retirement or a different chapter in our lives. And when I look at, I give Kyle Bass credit for this one because he was asked, what does the guy in Delaware do after losing 10%? He goes, that's nothing compared to what those people in Japan have lost in a month. And that's over 25% in a month they have lost. Those dreams and hopes are out the door. So what is that initial knee-jerk emotional reaction do for the people in Japan? They get all panicky because they know interest rates are going to continue to rise, continue to push down on the value of their 401 or their retirement plans and savings. What is the natural knee-jerk reaction? Sell. And so what chances are we're going to see is more selling in the Nikkei and those individual retail investors, because they're always late to the party, and that will transfer over towards us. We'll start to see that in our markets. We see another drawdown like we saw on Sunday night in Japan on the Nikkei by 12% a day, which is holy cow. That will transfer over to us. And I think this is where, like you said earlier, recency bias. All they're talking about today is buy the dip, buy the dip. And reality is they're not taking into account everything that's happening out there in the ocean. 10-hour, 5,000 miles away from us. They're not taking that into account. And I think that's what we need to pay attention. One other chart I'd love for you to bring up is the VIX.
Oh, okay, we can do that.
Yeah. The VIX is the volatility index for the S&P 500. This is very telling because there is sort of ranges the VIX works in that gives you an indication of what the volatility of the S&P 500 is presently. And then there's another one that measures the volatility of the VIX that gives you an idea of what's coming. So touch on this. I haven't seen this since the pandemic. This move.
This yesterday went up to the high was 65.73. And today we're down back in the Bollinger Band. We're at 24.34. And let me put this out a couple of years. There, that gives it a little more perspective in 2 years.
Wow. And the thing is, if you think of in ranges of the VIX, below 18 is more bullish. And the VIX has been between like 12 and 15 for quite a while. I think most of this year. And then once you get over 18 to say 25, 28 or so, you get into what we refer to as the chop bucket. That's where you get a lot of volatility, but it's non-directional. It's more sideways moving, but it can rip you apart if you're trying to buy within it. And then over 28 and above, that's where you have major collapses. And that's what we saw yesterday. The VIX opened up probably right at 64 in the morning. To me, we're not out of the woods because we're not back in below under 18 at this point. To me, this is something I would continue to keep an eye on. As long as we stay in that chop bucket, you're going to see zigzag movement, but most likely sideways for a while. And that's where you can get your face ripped off. Without a trading plan, it's how you end up losing a lot of money.
Yep, definitely.
Yeah.
I mean, I saw, I was watching halftime report before this video, and Josh Brown was trying to say that yesterday was just a normal day, and the judge wasn't having it. And the reason that the reason the judge wasn't having it is because when the VIX does that, that's not a normal day. These are normal days here, you know?
Yeah. And I guess that just drives me absolutely nuts that somebody who manages money for people says, oh, this is just a normal day. No, you had an event that hasn't happened in 2000 since 2007 that basically ripped the faces off a lot of institutional traders, investors who have been borrowing the yen for nothing, and they've been high risk in these risk assets, and all of a sudden it blows up because the Japanese central bank decides to raise rates 15 basis points, which is nothing. That's just irresponsible.
Well, I don't think you can even just bring it down to a day. We've had, several days, and we look at this chart all the time with the QQQs, which is the blue line.
Yeah.
Okay. And then we have the Dow or the S&P, which is the red line. And then we have the this is the what is this? The Russell.
Yeah.
No, Dow, Qs, S&P. Sorry, S&P is the red line.
Green
This is
line's
the
the
Dow.
Dow.
I'm sorry, green line's the Dow. Okay.
Yeah.
I changed these all up. So Dow, blue line is the S&P, and the red is the Qs, and the red line's the Russell, or not the Russell, the S&P. Sorry.
Blue line. The blue line is the Qs. The red line is the S&P, and
right.
the Dow Jones is the green line.
Yeah.
And what are they all doing?
Well, the trend is still down, but we popped up a little today. So, this isn't just a day event. It's been a while, in the last week or two, we're seeing this. So it's got a ways to go to get back up to where it was,
Yeah, absolutely.
The oscillators on the S&P are still, not doing well. So, again, just be careful.
Yeah. I think the final message in this is hopium doesn't get you really anywhere. As Mark Wahlberg said in that movie, what was it about the oil rig that blew up?
Oh,
and he said, hope's not a strategy to I forget the guy's name, but anyways, it's a good line, and it really is true. And having a prop in these markets, hope is not going to save you. So build a process. Join Best of U.S. Investors. We have a 14-day free trial. Give us a go, and learn how to better invest and how to protect your assets, and make your dreams come true. Simple as that. Mark, you got anything else?
No, I just say that you take so long to build your wealth up, and you don't want to lose it. So you got to really risk manage during these times, especially if you're getting closer to retirement, and you can't afford a financial meltdown that's going to take your total assets in your retirement accounts down, for 13 years, where you need to be drawing off that, either now or in the next 5 years. You just need to be aware,
Yeah, I agree. That's the thing that makes me shiver, is how much wealth is being erased because people just don't have an investment plan. It's fixable, though. It's not too late. All right.
Yep.
Mark, thank you for your time today.
All right, I'm going back to the beach.
Go back to the beach.
Yep.
I'm going to go back to analyzing markets.
You can do that from the beach.
That's right. In the meantime, you all have a great day. Hit the subscribe button, the like button. Check us out at www.bus13.ai. That's www.bus13.ai. We'd love for you to join our tribe, be a part of our community, and in the meantime, be safe and live loud. Peace.
And cut. All right.